Okay, everyone, good day to you. And we're going to start our revision session. And so we have a couple of things to do in this session. We also have a presentation. So we'll see what happened in presentation. Uh, I gave you an assignment and I received the answers by the students, and so the best assignment answer provided by the group of Samarnayaka, Gunwardhana, and Priyavardhana, and Jomahandige. And so I think they are ready, right? So are they ready for the presentation?
Yes, sir.
Yeah. So what we're going to do is that so we'll have the presentation at the end, because this is a 2 hour session, and so we can have the presentation at the end, and so we can keep everything together and discuss at the end. Yeah. So we'll start from the review session first before your exams. Um, So we'll quickly go through, I mean, what things that you have to go through when preparing for the exam, and what we covered uh, over the 3 weeks that we met uh, in this module. And first, we gave kind of an introduction for this module, the public accounting, finance, and compliance, uh, and also we discussed about strategic financial objectives. We also discussed about the concept called the performance-driven financial forecasting, and we discussed how it differs from traditional methods of forecasting. And also we discuss the board of management of SOEs, state-owned enterprises, and so what are the financial management practices. So that's kind of overview of week 1 and 2. And week 3, we went into financing methods, capital structure, and all. So we'll first go through week 1 and 2 and see if there are like the issues that you have. First, in this module, it is required you to identify, so what does it mean by public sector? So what are their key characteristics compared to private sector? I know, I mean, some of you working in the government sector and some of you working in the private sector, so they have clear differences in terms of their objectives and how they operate. Sometimes some people might have worked in like both sectors, so uh, they experience the difference. So especially when it comes to public sector, they have clear differences. One is that before going to that, I mean, we discussed what includes in the government sector. The one of major component is that central government departments, as you know, that Department of Finance, Education, Agriculture, and so on, and also local government bodies such as the municipal councils, provincial councils, and those, and state-owned enterprises, and schools, hospitals, and regulatory bodies such as central bank, SEC, and those places. And after that, we discuss about their characteristics. So their main characteristics if you go through that, they focus on public service delivery, and they're non-profit in nature, and they fund through taxation, as you already know. So they have high accountability compared to like public private firms, and they need to adhere to like the strict regulations of the public sector. Those are common characteristics. So what I need you to go through is that so these four components of public finance. So how the government operates. So that relates to your assignment as well. So if you remember, so I tested these components in your assignment. So what does it mean by revenue generation? How governments do that? So what are the trends of revenue generation over the past in Sri Lanka? There are things that I'll give you to think and write. So if you go off from the, because these are like the open book, I think this is an open book one, no? So is this an open book exam, or do you know?
Yes, sir. Open book.
Open book.
Yeah, open book one, no? So since this is an open book one, so you have to give like the very specific logical answers, right? So vague and general answers, they don't carry, I mean, high marks as of because that's the same case of your assignment as well. So I mean, you can find a lot of information or web or whatever, but there are like only like the few people who really narrowed down, I mean, the questions and answered. So it's all about like how you filter out the all the information and answer things to the point. uh, so that what matters most. So that's why it is important you to identify the theory and like the concept well and organized manner. And if you come back to these four components, one is that revenue generation. So how governments do that? So what are the largest revenue generation components of government, and how they spend money? So what are the trends? So in Sri Lanka, so what trends you see in the expenditure? So can anybody try? Give me one trend. If you read newspapers and watch TV, do government spend money?
They do.
Anyone?
Yes, government does spend money.
So
Mm,
what are the trends and characteristics you see these days?
Education, development. They
Not
have.
like that. I mean,
Uh,
so if you ask a question like that, yeah, that's true. But you need to have kind of big picture on that. For example, say that so what are the characteristics that you see in government's expenditure in recurrent expenses and like the capital expenses? So you see that some delay in like the capital expenditure, and they want to like the launch capital expenditure more in coming years, that if you listen to the budget and all. So these are things, I mean, you have to be uh, I mean, you have to be aware of. And so you especially I require to like the listen to these budget speeches, and so what they propose in the coming years and all. uh, and yeah, so yeah, there are some trends that you can see. Yeah, sector-wise, it's true. I mean, there are different sectors that they're targeting. But if you go to the big picture, so we can see like some differences in expenditure when it comes to the capital expenditure and also the recurrent expenditure. These things, I mean, you need to go through the budget speeches and things like that, and you have to revise. And also, we introduce a third component, but is called like the debt management. So why debt management come into play? So anybody? So why this third component, debt management, is there? I think we already discussed these things. So why debt management is important? I mean, why debt management is there at first?
Because of the expenditure too much high.
Yeah, exactly, exactly. I think we discussed that in the previous classes. So, when
Sorry,
government
pause.
have high expenditure compared to their revenue, so they are short of cash, and then they have to borrow from somebody. I mean, it's the same case for you as well, right? So you get your salary and you spend more than your salary, so you have to either you have to use like a credit card or you have to borrow from somebody.
Is it,
So that's
sir?
a case for yeah. Other
Sir,
question?
if
Or
sir, the reservation of the foreign currency also is a matter, I suppose.
what does it mean?
I mean, now when it comes to debt, you have to pay in different currencies, so that you have to
Yeah,
have the.
exactly. Hmm. Yeah, that's true. Because when it comes to debt, as you said, like it's a matter of how they divide the debt between the domestic borrowings as well as foreign currency debt borrowings. So those are very budgetary and very relevant decisions that government has to make when it comes to their public finance or the topic of this module. Yeah, so these are the things that I need you to think deeper, right? So, what's the government's current strategy as you think? So, if you go through their budget, so do they insist on borrowing more locally or internationally in foreign currencies?
In locally.
Yeah, locally, exactly. So that's what they propose. Borrowing more from locally, borrow more locally, because I mean the borrowing internationally can have like the issues, especially with current foreign exchange issues. Yeah, so that's how. And the final one and most important one is fiscal policies. So, what are fiscal policies? Can anybody try? So what are they? Why fiscal policies are there? Fiscal policies are like rules, right? I mean, if you remember that we discussed. Rules in the sense that in what sectors that you can draw money when it comes to operation of the government, or what revenues that you can cut when it comes to limiting the expenditure. So policies, fiscal policies are like the rules that government impose when it comes to their public finance operations. So, I mean, there are a lot of fiscal policies that you can think of. One of major fiscal policies are the tax policies that the government insist on. Give a classic example, recent example, the government's fiscal policy. Classic example.
About vehicle.
Hmm? So what they discuss in the like the election meetings and all, like they're more related to fiscal policies. So if you remember, tell one thing.
Increase their um, revenue by using taxation in direct taxation and indirect taxation both.
Yeah, that's true. Yeah, that's true. That is a good point. So how much you rely upon the direct taxation and indirect taxation when it comes to finance of government budget? That's a bit kind of advanced one. Just give like a simple one. I mean, if you remember the election promises and things like that, or they like Sajid, Tanura, and those candidates mentioned during the election
They
time.
are going with the IMF.
No, that's not a fiscal policy. That maybe have implications. So think about something like that. I mean, if you remember the main candidates, they promised uh, the minimum taxation threshold for the income. So one party they propose like the 200,000 and others they 150,000. So these are related to fiscal policies. I would say that because uh, that determines, I mean, how much you and also the tax percentages, income tax, and also the taxation on vehicles. So how much you tax on vehicles. In addition to that, VAT, how much you charge for VAT, and in addition to that, you can have uh, things like how you spend money, such as, for example, if you spend money for how much you spend for the health and education. So these are like policies that you can think of. These are like the rules that governments can go through, especially when it comes to taxation. I mean, you can think about like the rules and things like that. So if you think about a typical mandate of like the during the elections, they have they're kind of fiscal policies that they outline through mandates, but they may be in like the simple language as like the um, uh, to understandable like the general public, but they are rooted to the fiscal policies, right? So if you propose that if you think about that US and also, I mean, any country it's common, right? What you read as Trump policies and also Obama policies, and so most of them are rooted into fiscal policies that the governments are intend to follow. I mean, during the election times. Yeah, so that's one thing I want to mention. The policies are like rules and kind of procedures and also kind of approaches that they are following when it comes to, I mean, if they are contesting for like the for a uh, I mean a victory. So these are things that they're proposing, right? So the fiscal policies are like that. So they are mostly shaped by the political wing that you belong, right? So if you are like the more into like the right wing politician, so you would have like different policies. So if you are more into like the left wing politician, so you might have like different policies, something like that, right? So these are the fiscal policies. Yeah. So if you go through like the uh, one by one, so one is revenue generation, the other one is expenditure, debt management, and fiscal policy. So they are key components. So when it comes to the revenue generation, I think we deeply discussed, right? So how you can generate revenue and also expenditure. So to what you spend your money, right? So that thing. And that comes into play because you have more expenses compared to revenues. And expenditure, debt management, and fiscal policy, I want you to especially pay your attention, right? So there are a set of rules, guidelines established by government to guide decision making, right? For example, government may implement tax reforms to stimulate investment or adjust public spending or mitigate economic downturn. So these are belong to fiscal policy, right? For example, say that the some other candidate comes in and proposes that tax cuts to like the facilitate the businesses and growth of small and medium scale businesses. Uh, they are kind of fiscal policies. I mean, it's a matter of, I mean, then they have to come up with an idea, I mean, how they can counterbalance the lost revenue and things like that. But anyway, these are what you call these policies, right? So how you implement your tax policies and things like that. So I recommend you to like the go through. I'm not sure I mentioned to you, or maybe other batch. So I recommend you to go through. I think the mandates and of maybe the Trump and all the Republicans, Democrats, and also in the UK you can find it very clear. So their mandates and all the like their policies are published. So you can go through and see what belongs to like the fiscal policies and things like that. Right. Yeah, that's one thing. And yeah, so the discuss Then we briefly touch upon the public accounting, right? So accounting is also like the part of public finance that it keeps track of like your expenditure and also your income. So these are like the main accounts that they have when it comes to government budgetary accounting. They what I want to do is that pay special attention to this one. What do you call this consolidated fund? So that's a very special kind of fund. So they include all the revenue received by the government and all the expenditure made, primarily for government purposes. So that's one of key accounts that they maintain by the government, right? And in addition to that, we discuss fund accounting. And also, we discussed two types of accounting. One is that fund accounting. Fund context of accounting generally refer to the separate entities or categories of financial resources that are segregated to specific purposes of activities. And if you go to the budgetary accounting, it's more budget related. So what's a budget? Budget is an estimate that you put out for it's kind of your like the expenditure and your finance plan for coming years. But if there are like the accounting related to that projections, so that fall under the budgetary accounting, right? So these are different. There are some elements of budgetary accounting, so just go through that, go through these examples and things like that. And we also discuss about what does it mean by compliance. It's your adherence to like the laws and regulations. So these, I mean, you have to go through the all lectures and like they go through them in detail. So we have like limited time, so we might not be able to go through each and every one. So I just want to give you overview of things that you have need to pay attention. And compliance and this one. So strategic financial objectives is another concept that we discuss, right? So they're like the so if you want to describe this in like the simple terms, so strategic financial objectives like the rules and goals that helps to manage the money collected from taxes and how you can spend it wisely. Uh, it has like the several characteristics, so we can go through these ones, and we discuss about some example. I think yeah, some example, CB example. So the best way to like the practice this concept is that go through example, right? So for example, that these are like the objectives driven like the financial decision making. For example, for CEB, so it's a government entity. So if they have objectives are maintaining the financial health and stability, uh, in addition to the operational demands and external challenges, so you can like the plan how you can do that, right? For example, in the strategic phase, so CB aligns its financial objectives with long-term strategic goals such as increasing renewables. So how you can achieve that, and also you should have like a performance management mechanism, right? So you can implement key performance indicators to see how you align with these objectives, and you need to have like a plan to build your capacity to meet these objectives, and you need to have like the plan to go collaborations when you require like the additional capacity in achieving these goals. So it's to give like a brief overview. So strategic financial objectives are objective driven, like the path that you can go through. So if you are like the government agency or whatever. So first you need to go with your like the financial objectives, and also based on the objective, so you can arrange the other things around them. So that's step 4. So that's one concept that you to do know. The other one is that performance-driven financial forecasting. So that's also another concept I need you to know. So what does it mean, and can you explain that using an example? Is the thing that I need to know. And also the what's the difference between traditional forecast. So the I gave an example also. So can anyone say that? I think we already covered this. So what does it mean by performance-driven financial forecasting? Can anybody try? Anyone? So what this concept mean? Anyone? Give an example. I think we discussed this example earlier. That road example, if you remember. So if you are a government agency, right? So say that road development authority, and you need to forecast your budget or maybe your financing for next year. So under traditional method, how you would do that? Anyone?
Depending on the previous data.
Yeah, exactly. Right. Great. So that's how previous the traditional forecasting does. So if you are the road development authority, or if you are the water board, or if you are, I don't know, Sri Lankan Telecom or whatever, the government agency. So if you want to do like a forecast and traditional methods, what you do is that you see, I mean, how much you spent like the last year, and you forecast next year based on the last year's figures, and you add 10% or 5% increments, and you do that. But this performance-driven financial forecasting is much broader than that. So it basically align financial projection with your goals, right? For example, I think we'll discuss that in the next slide. For example, say that you are the road development authority or road building arm of the government. First, you put your objectives, right? Not your like the finances. Say that you need to reduce congestion, or maybe on roads, or maybe you want to reduce the emission, right? Or you need to increase the accessibility to the economic hubs. So you put these objectives forward, and you design your next year's expansions and all the road development plan around that objective, right? It's not just you are looking back last year and how much you spend and you add some money and pass the budget. So it's not like that. So it's much broad based, right? For example, the road ministry plans to budget for road maintenance and infrastructure development for the upcoming fiscal year, right? So they might first ensure they calculate the average yearly expenditure. This based on like the traditional method, and they do the forecast. So that's how the traditional method does. So, but if you go to the performance-driven matrices, what they do is that uh, it involves collaboration across departments and uses data-driven insights to optimize the resource allocation. For example, the percentage of road in good, fair, and poor conditions. So they assess that first, right? Because sometimes, I mean, the most roads you have already completed last year, right? So getting last year's approximation to next year it might not be like good approach, right? So they might be in like good condition already. So you have to go through a proper analysis of what percentage of fraud in good, fair, and poor condition. And also, you have to get the citizen feedback, right? Which area roads are like the need repairs. And also, you have to estimate average time taken from project initiation to completion of road construction, and also target of reduction. If you have a target of reduction of accident rates, so how your road design can can accommodate these objectives, right? You remember, I mean, the one of the main differences between the performance-driven financial forecasting with traditional matrices is that they are objective-driven, right? For example, if your objective is reduce accident, so perhaps you might get data from the places that already had accidents, right? So these places say that narrow roads or maybe some roads with bad condition, so you put priority to repair those, right? For example, if there are like the bends, so you might think of like the reducing the curvature of these like bends, so you can do that, right? By adjusting rods and or maybe you can if there are like these certain accidents happen in like the places that you don't have payments sidewalks, so you can uh, invest on putting the sidewalks, right? So these are the like the main differences. I mean, compared to like the traditional method, right? So you can see the broad differences, right? So you come up with an objective and you arrange your budget around this objective. So that's the main difference between the performance-driven financial forecasting and the traditional method. So you can see, I mean, this method is much more efficient and much more. It could be a bit expensive compared to like the traditional method sometimes, but long run you get like the huge payoff by going through this approach. So that's why it's in your syllabus, and you have to pay special attention, right? Um, so these are some example to reduce congestion. So if that's one of your plans, so you can accommodate increasing traffic volumes, right? I mean, there are some roads, if the number of lanes not enough, so you can think of expanding these roads, right? You can think of the places with high congestion, or you can think of what do you call the uh, um, establishing or maybe installing uh, traffic lights, right? And also expand the lifespan of existing road and reduce long-term repair costs. Sometimes, rather than like the investing repeatedly on repairing with low quality material, so you can think of going for like the high quality material that would last longer. They might be expensive, but over long run, it's good for your budget, right? So adapting advanced technologies such as smart traffic management systems in reducing the congestion, right? So these things you can think of. They are clearly fall under uh, the performance-driven financial forecasting. They are completely different to the traditional approach that the government agencies used to uh, forecast their 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 future expenditure, right? So that's one of these. And there are some calculation procedures I mentioned, right? So how you calculate total budget uh, under like the traditional method as well as the performance-driven forecast. So this slide is crucial, right? So this gives you a clear difference between like the traditional method and traditional and performance-driven method. If you go to the focus, so traditional methods, they focus on historic data, right? Historical data, and PDF, they're futuristic, right? So they forecast based on their goals, right? So that's how you do. It's just like your day-to-day life as well, right? Sometimes you can plan next year or this year based on like the past year. So you might think of, oh, maybe next month based on like your past month's expenditure. You might think of, okay, this next month I would need this much of money. So you can do that. So that's one approach of doing that. So instead of doing that, sometimes if you have certain goals in your like the mind, right? So if you need some education, or if you need some if you have objectives of lose your weight or it- something like that, so you can arrange the budget based on what you need, right? So that's a different approach, right? Right. So sometimes you allocate money for like gym membership or like food more compared to like the last month. If your objectives are uh, different in the like the next month, right? So just like that, right? For the government also, so if their objectives are different in future, right? So of course their budget has to be different, right? So when it comes to objective, you can see the predict future financial outcomes based on past trends. So that's a traditional approach. In the performance-driven approach, you align financial projections with strategic initiatives and goals. And high data is used when it comes to the performance-driven financial forecasting because they are quite data-driven decision making that you have to go through. And traditional method, you basically follow historical data and macroeconomic indicators, all historical, right? So based on historical, you can you predict like the future. But unfortunately, you see, I mean, most of the projects kind of traditional financial forecasting. But if there is room to improve them towards like the objective base financial forecasting, so that's really good. So that's the message. And method is that basically they trend analyze, and when it comes to the performance driven, they scenario analyze. I mean, they analyze scenarios. If you go to this project, so this much I want to mention spend, and this like this. And they also have sensitivity testing. The time horizon, traditional financial forecasting is very short term looking, right? They can be cheap as well, but performance driven, they are long term. So what I need you to know is that you need to know the differences, and also you need to know the examples, right? So to give to distinguish the traditional approach and performance driven approach. Okay. SOIs, I think we discussed, so I don't think, I mean, we have to go through in detail SOIs because they are quite familiar. So, what are SOIs, for example? Can anybody say? Give a like definition. What are state-owned enterprises? I know, I mean, some of them work at SOIs as well. So, what are SOIs? Anyone?
Government.
What are
By
state-owned enterprises?
government.
State engineering.
No, I mean, give a definition. The kind of idea.
They are controlled and ownership is by the government.
They are controlled and ownership is in the government, but what's the main characteristic? They are
They are
competing with who?
profit driven or something.
Yeah, profit driven
Funded
sometimes,
by
and they
the
are competing with who?
Compete in private sector.
Yeah, exactly. So that's what I want to mention. So they are competing with the private sector, but they are owned by government. So that's one of like the issues that most of the SOE discussions you hear these days. So so their objectives are different, right? So they are in a different market. So I mean, and I mean, it's up to you. I mean, whether you would go to, I mean, you if you are like consumers, or whether you would go to like the government-owned place or like the private place. So it's completely up to you as the consumer, but they compete with the private sector to attract you. So it's a very tough thing to do, right? So if they have to attract like the consumer to their shops, so they have to have uh, they have to be like a very innovative, as well as their format has to be very supportive for that. It is kind of a very difficult thing, right? So whether SOEs are, but in some sectors, the having SOEs would be viable, right? Because it might bring a lot of knowledge and insights. But in some sectors, it might not be kind of good ideas to have SOEs. But anyway, the idea of SOE is that so they are in the uh, they engage in like commercial activities, so that's the main characteristic, and they compete with the private sector in doing business, right? So we earlier discussed that the government sector, they normally non-profit and all, but here, but they can still be non-profit as well. I mean, these characteristics can still be there, but ultimately, so to survive, so you have to attract customers and you have to generate business, right? So that's kind of a different difficulty, right? For example, think about like Satos or Telecom, or maybe I don't know, like you name like multiple of SOEs you can think of, and they have to generate business so that they are not loss making. That's the objective. And there are other firms that operate in the same space. Those are like the privately owned, and they have like the all the bonuses, and they have full flexibility in like the increasing like the uh, salaries and recruitment and things like that. So if you see like a good guy, so you can go and headhunt and hire. So you can do, I mean, a lot of things like in the private sector, but government, they have regulations, rules, and so they have to do everything inside those, and there are delays in like the processing. So with all of these, I mean, you have to still compete in this space with private sector in making profit. So if they loss make,
Sir,
so
excuse
that
me.
yeah,
So all the SOEs can't compete with the private sectors, no, sir? Because if
yeah.
we take
So not all
railways,
the
we don't
SOEs
have
compete with
competitor.
private sector. Yeah. So not all the SOEs compete with private sector, but they engage in commercial activities, right? So for example, if you think about give an example, then like the SOE who doesn't compete with private sector.
Railway, we don't have competitor
Yeah,
in
railway. Yeah, railway
private.
is a good example. But they indirectly compete with the other means of transportation, but not a direct competition. So they indirectly compete with maybe Pick Me, Uber, and also the private buses, but not a direct competitor. Yeah, railway is a good one. And in addition to that, you can
Electricity,
think of
electricity.
yeah, electricity, but I think now it's bit of but distribution. I mean, you have some private
Like
sector
Leco.
and also generation, but largely it's like the government owned. Uh, and in addition to
Sir,
that,
um,
airline.
excuse me, mainly SOEs are providing services more than the business. Is that
Not
true?
necessarily. So there are SOEs who provides the product-based solutions as well. For example, think about the Cashew Corporation and yeah, places like that. Yeah. So they are product-based, right?
Gem
And
and Jewelry, Gem Corporation, is it?
yeah, Gym Corporation, and so it's not necessarily services. But thing is that in some sectors, so as someone said, so some SOEs they don't have a competition with the private sector because those sectors are quite restricted. That means the private sector can, for example, railways, so you cannot start another railway company, right? So that's there are a lot of difficulties in doing that. That's the same case for electricity as well. So unless there are restrictions as such, so they are in most SOEs they are competing with. So example, say that. Even if you think about Sri Lankan Airlines, so they compete with other airlines, right? The Singapore Airlines and all. So they might not be Sri Lankan known, but I mean, just think about you. I mean, if you want to have like the holiday, and so what airlines you would select, right? So you might go for like the best value airline, right? So in that case, there's a competition, right? So that's what I want to mention. Do you have any other thoughts? Or yeah,
So
basically I want.
what about
Sorry.
these container terminals, Jaya container terminals and
Yeah.
CIC?
Yeah,
So
that's now we see kind of an increase in like the competition. No, I mean, so there are but
But
they are not that kind of openly competed. Like for example, so they might not be kind of perfect examples, but they are in commercial activities anyway. So they fall under this like the common bracket of commercial activities. That means government on is even the state on state engineering. So they do commercial activities and they generate revenues and all. Especially like think about banks, right? The government owned banks. So they also they publish profits and so they want to. I mean they do advertisements, right? You can see. I mean a lot of advertisement by people and also BOC and all these like the banks. So they generally compete with other banks. I mean, so their customer base and things like that could be different, but they engage in commercial activities. So you cannot reject the fact that they are not engaged in commercial activities. So SOEs generally engage in commercial activities. So that's a common characteristic that they have. But their competition can be differ. It can be differed from the uh, industry to industry. So that's a kind of thing that I want to mention. But don't forget they engage in commercial activities. So that's common for SOEs. Think about the example I listed down here, like CPC. So do they have competition? Uh, might not because of the regulations and things like that, but they engage in commercial activities, right? So there are some other private firms like maybe
IOC,
Sinopec, IOC, and
Sinopec.
those like the players. So you can see the thing, right? And also and also railway. I mean, we discussed Bank of Ceylon. I think that also we discussed, right? So you can see the clear difference. So what I want to identify is that is there a difference between Bank of Ceylon and the Minister of Education or the Minister of Agriculture and the Sri Lanka Railways, right? So there's kind of difference, right? Minister of Agriculture also, I mean, they engage in some businesses and things like that. Sometimes they have outlets and all. But think about the education department and also there's kind of difference that you can see. So SOE is kind of different government enterprises. They engage in commercial activities, so they do business, right? So they do businesses, and so that's what I want to mention, right? Okay. Uh, yeah, they are governed by a board of management appointed by the government, and so they have reputed veterans normally appointed to their boards, and also play an important role in the economy, and also in the recent past, you can see a lot of criticism on some SOEs that they are making losses and things like that. So the loss is passed to the taxpayer. So that discussion you can see. So one of the main challenges that SOEs have is that so they have to balance the profitability with public service, and also they have political influence time to time depending upon the government in power. Uh, you can see like less or more compared like the government type of government, but political influence is common characteristic in the SOEs, and they have to improve transparency and accountability as well. So SOEs. Um, yeah, this one I think we discussed. Yeah, there are some examples, so you have to go through. Yeah, board and this one I want to discuss. So this outlines difference between the management of SOEs and private sector boards, right? So appointments of the SOEs often by the government, right? But private sector they are by the shareholders. So it depends upon like the who owns like the highest shares and all. So there are if there are like the influential shareholders, so they can have the directors, and so that's how they operated. So but not in like government choice. So the primary objective of the private firms, their objective is that maximize shareholder value. That means mostly linked to the profit, right? So what shareholders need is the profit, right? The other ones you can think of the SOEs, so balance public service and financial stability. Public service also like the factor that uh, the SOEs have, and accountability. So the SOE is accountable to government and private sector accountable to shareholders. Regulatory oversight on SO is high, and private sector is moderate because they have flexibility in some decisions. Political influence generally high on SOEs, but private sector they are limited. And they're limited though maybe no influence. Depends upon the industry. Autonomy often limited for SOEs, but private sector they have high autonomy. If you need to hire someone, so you can hire. You can if you want to increase salary, so you can do. There's a labor law, but still within that, so you can have a lot of things. Also, the performance matrices, the mix of financial and social indicators, and private sector, so the primarily financial indicators. Transparency is high for SOEs. You see, a lot of the co-op questioning and things like that. That because the SOEs are subjected to public scrutiny a lot. And private sector board, it varies. Sometimes you are required to have transparency, but but if you're like privately held firm, it can be limited. You don't have to publish as of the PLCs. Composition often include ex officios of the government representatives for SOEs. The private sector, typically industry professionals and who has experience in the industry. Tenure mainly change with government shift for SOEs. Private sector is stable, right? So you can serve up to, there are some age limits sometimes, but up until 80s, so 70s, so sometimes you can serve in the like boards or maybe as like the advisors and the people like that. Generally, they have flexibility to keep good people or talented people, but sometimes government so is they don't have that flexibility, so they have strict requirement of retirement and things like that. So risk taking generally conservative, so is government, and private sector is very attractive in terms of risk taking, so they can be more aggressive, and innovation focus is limited because there's a lot of bureaucracy that you can see in SOEs, but private sector is high. Compensation generally lower for SOEs compared to like the private sector. Uh, and the private sector is often high. Social responsibility is high for SOEs. Private sector is not that much. So you just think about like two firms who one is operated through the private sector and the other one operates through the government ownership, and you can think of the difference, right? Any questions out of this one? Oh. Anyone?
No, sir.
Okay. Okay, just make sure you know the differences, and also try to have an idea of like the having these like the characteristics. So just think, I mean, you can apply to like the certain situation, right? So that's quite important. The exam is concerned, and whether you are able to think of like a model that has like the differences, right? Um Also, we discuss about dual objective of SOEs, balancing profit with maximizing of social welfare. So that's kind of challenging thing, right? So that's the thing. Uh, yeah. So it can be difficult. I mean, doing business can be difficult. So that's the thing, right? So if you try to operate as a uh, government organization, and if you try to compete with the same private sector and try to generate profit, it can be difficult, right? So that's the thing. Unless you have like a like CB, and also they have like their model is different, right? So they have monopoly in certain things, and so they have that power. So if you don't have that power, and if you just try to compete in private sector, so then it's a very difficult thing. So these are example of good SOEs, right? So still being as an SOE, so how we can come up with like a good business model. So one is the Singapore Airlines I mentioned. So they operate as like the SOE, although they did some privatization. So they have, I mean, special characteristics that they follow when it comes to maintaining their standards. So they basically operate as like a private firm, right? So you can think of some of the like the examples of Singapore Airlines. So they are very commercial, right? So they have flexibility in hiring people, and like the remuneration, and also the trainings and things like that. So they get the government support maximum, and they have the private sector environment. A strong corporate governance also they have, continuous innovation. So these things help Singapore Airlines thrive. There are a lot of stories, so how the Singapore Airlines has been built, right? So I discuss all of these things. Privatization of SOEs, so there are
Sir,
gains,
excuse
and
me.
yeah.
Uh, can we take Port Authority as a profit-making SOE?
That's true. I mean, there are a lot of
Yeah, when
profit-making
we check the
SOEs, but
customs
now
also.
what they bring is that, so if you think about the recent dialogues on the SOEs, so what now people bringing is that, so their profit generation is not enough compared to the assets they have, and so that kind of discussion also we see. That means, for example, there can be some government agency or SOE making profits, but you have to compare their profit with the resources that they have. So there are a lot of ratios that you can think of, return on assets and these things. So you can compare that with like the private sector, right? So ultimately, if you think about economy as whole, so you need to have the maximum efficiency of the resources. I mean, regardless whether they are owned by private or public. It's a matter of like efficiency, right? So there's a lot of discussion going on, right? But I think that in certain sectors, having government involvement is good. But I mean, there are some caveats as well. So basically, you have to go through like the fifth, I mean, kind of balanced approach. Yeah, I mean, as you said, I mean, so there are several government organizations that make profits. So but you have to compare them with like the matrices that you follow, right? Uh, yeah, like so are their profits good enough with their assets and things like that? Yeah,
Sir,
yeah,
sir,
yeah.
sir, the profit being earned by SOEs, are they straight away going to consolidated fund at the treasury or being used for any other purpose?
Yeah, it's a good question. So that rule changes time to time because if you think about special places like central bank and also earlier that there was like a rule. I mean that when once you earn a profit after everything, so you have to like you can transfer it to the government because government is the ultimate like the owner. But sometimes, so there are places that they allow you to like the retain this profit and invest in like the future and things like that. So it depends on like the government to government and like the different regimes that you operated. Yeah, so it's a good question, and you can read more about that. So how the current practices is happening in like certain sectors, but there was like rule that the profit has to be transferred to the government. So that thing is there. Yeah.
Thank you, sir.
But sometimes if they have expansion, so things like that, so they have some autonomy in profit distributions.
Maybe a
Uh,
percentage. Up to,
yeah, like especially if you think about the listed firms and all, like maybe telecom and all. So I think I'm not sure if they pay dividends. So if they pay dividends, I think not all the profit go to the government. I think the part goes to the shareholders and other shareholders as well. Yeah, the government in the sense that it depends on sometimes there are some SOEs they are not directly owned by government. So sometimes they are owned by some other government agencies as well. Right. I mean, if you remember, I mean, there's a discussion on that the cafe area of uh, the the uh, the what do you call this highway. So there's some political
service area.
discussion going on. Yeah,
Service.
yeah, that who owned that, and so some people say that I don't know, like you can read that further, and so that some people say that that's owned by like the another government organization. So that means it's not directly the government. Uh, Perhaps some other government, for
Like
example,
Lanka,
say,
like Lanka
yeah,
Logistic, which was there earlier and it was disbanded later.
yeah. I mean, in some organizations, the government have shares, right? So in that case, so it's a bit complicated. It's not that same as we just transferring profit to the consolidation fund. For example, say that if Sri Lankan insurance own like a particular SOE or maybe they have shares. So the profit transferring is not that straightforward, right? Because Sri Lankan insurers they have government stake, and that profit transferring mechanism is not that direct. So that's the thing. Uh, because even SOEs sometimes they have private ownership as well. Also, they have these holding companies and these like the arrangements. So because of that, especially you can think of how the hotel corporation and those profits are being transferred to the government. I don't think, I mean, there's a direct transferring. So you can research more about that. So I feel that there's a autonomy, some autonomy in distribution of profit. Because since I work at like the central bank and I went through these like discussion and all, so central bank had like the time to time some different practices in that. So when they make profits, I mean, at times sometimes they have to consult government on like the profit distribution and things like that. Yeah, but some of them they transfer to the government, I think, because if you think about the government, so normally government they record that in their financial statements. So profit from SOEs they mention. Of course, there's a portion goes to government, so that's true, but it's matter of like the percentage and whether there's like direct transferring. So that you have to research further. Yeah. Okay. Okay, this one I think we discussed, and we can go to the other one. I think before the presentation. Yeah, the other one is a very important section. I think we discussed. In this one, we discuss the financing strategies. So especially when it comes to the government and government organization, SOEs, and all the like the things that we discussed earlier. So what strategies these organizations follow is the thing that we discuss in this slide. So here, when it comes to a organization, so there are different means of financing. One is that basically you have, I mean, there are different categories you can think of. The one is that primary sources and supplementary sources. The other one is internal sources and external sources. So these things we discuss in the first half when it comes to the government financing. And second, we discuss about the capital structure, right? So that's one of two most important things that you have to go through. For example, so the one of the main financing methodologies that we discussed, the primary sources and supplementary sources. The primary source of any government of funding is taxation. So that's why the government is so keen about these tax policies and all. Again, there are fiscal policies, as I mentioned earlier. So how much you charge, how much is the VAT, if is it 15%, 14%, so everything matter, right? So everything count because that's a primary source. But in addition to that, you have the supplementary sources as well. For example, if you go for public-private partnerships and also foreign aids that you may receive during the crisis periods and all during disasters, and so these are supplementary sources. So another category you can have is that other way of dividing that internal sources and external sources. I think there was a question also that someone asked. So how much you finance through the FX and how much through domestic. So that's what we discuss here, right? So either you can borrow domestically or you can borrow internationally, right? So that also like another categorization that you can make, right? Yeah, so that's one of the things. And also we had the separation of public financing and private financing. The public, they provide public service. Private, they maximize shareholder value. Main financing sources, taxes, government bonds, and also some intergovernmental transfers. And the private financing, when it comes to private firms, PLCs especially, so they have equities, so they can issue equity, and that helps them to draw money. And also the debt, debentures, you might have gone through like the advertisement and all. Loans, you can borrow from the banks, and retain earnings, if there's money that they retain, out of their profits early years, so you can use them. So these are like the methods that private firms finance. So now you can see that the difference between like the public financing and private financing, as well as types, right? So there's a clear difference basically. And these are like special bonds that we discussed. I don't intend to go through in detail at this point, so you can go through. So bonds are like the classic form of debt that governments use in raising money, right, for their operations. There are different types of bonds that you can see, right? So that you can go through yourself, because we already covered that. In addition to that, we want to mention, okay, the capital structure. So capital structure is that, so how in part form that to raise funds, right? This is especially relevant to like the private sector, right? So private sector, they raise funds in terms of equity and debt, right? So these are the main two type of like the instrument that they have, right? Can anybody say that why, if you think about private firm, so why they would think of raising funds as equity compared to debt? Can anybody say? If you are a private firm, so why you would raise funds in equity form than debt? Or the other way? Anyone?
The debt equity ratio goes down when
What's that?
increase the equity.
No, say for an example, there's a firm, say that John Keats, right? So they need maybe like the 5 billion. So 5 billion, would they raise from like the equity or would they raise from debt? So what makes the difference? If they go
Debt,
for equity, why?
debt will have a pressure to pay back.
Okay, and equity? Equity is what? Equity doesn't have that pressure.
Sort of giving you more control
It's
rather
a
than
kind
the debt.
of
yeah.
responsibility.
You are almost there, because the debt, you have scheduled payments, right? You cannot miss that, right? So you cannot go to like a bank and say, so I'm doing like the small business, so maybe I'm selling some flowers, so maybe I'm doing some like I'm selling some food online, and give me maybe 10 million, and if the business goes well, so I will pay back, and if the business go bad, so I won't be able to pay. So you cannot tell that, right? So loan is a loan. So regardless your business go well or bad, so you have to repay the loan. But equity is not like that. So equity is like a partner, right? So it's like the person who thinks that, okay, you are doing like a good business with good potential, so I will give you maybe like the 5 million. But I will be like a partner, the business, right? So equity is like that. So you are not required to pay back immediately. So that's the main difference, right? But why would someone give you money like that without going for like the scheduled payment? So why banks? I mean, why would someone give money as equity? Anyone?
It's a shareholder, as a shareholder.
Why would someone give that money?
To gain capital, sir.
Gain capital. What does it
That
mean?
means for investment. So now, suppose if I am a shareholder, so for a company, so they give us shares to increase their capital.
Yeah, this is a nice program. I think maybe I can show it to you.
Since it has an impact on exchange, stock exchange.
Not yeah, there are some good answers there. Just I'll show you some example here.
What's your name? I name it Laura. Do you mean my name is Laura? Yes.
No, there's a I don't know whether
ඉන්නත් එක්ක එකතු වෙලා පටන්
there's
ගන්න
a
හදන්නේ
program that
ව්‍යාපාරයක්. මෙහි අර
investors
ෆැක්ටරියක්
can
තියෙනවා. ඊට
come
අමතරව
their idea.
මට මේ සුගත් හම්බුනාට පස්සේ කිව්වේ ගමේ ඉන්නවා ජනතාව රැකියාවක් නැති ස්ථිර ආදායමක් නැති ජනතාවක් ඉන්නවා. ඊට අමතරව වසා දමා තියෙන කඩදාසි ෆැක්ටරියකුත් තියෙනවා හේ. ඒකින්ද ඉතින් එතුමා ආරාධනා කරා එහෙ අපි එකතු වෙලා කරමු කියලා. මම මහර ව්‍යාපාරයක් විදියට කරද්දිත් ඉස්සර මම සඳ ලංකාවේ කඩදාසි ෆැක්ටරියක් වසර 5ක් පමණ කරා.
Now
ඊට
he is
අමතරව
describing his
රීසයිකල් නැතුව ඇසුරුම් කරණේ
proposal
යොමු
to
වෙලා
some of the
තිබ්බා.
investors, and you can see the what investors say.
කඩදාසි ගම්මාන මට්ටමින් අපි කරනවානේ.
පටන් ගත්තා. හරි. මට පොඩි ප්‍රහෙලිකාවක් තියෙන්නේ දැන් මේකේ කොච්චර අපි හැදුවත් වැඩක් නැහැ. මේක අන්තිමට අපි විකුණ ගන්න ඕනනේ. එතකොට දැන් මට තේරිච්ච විදිහ අනුව ඔයගලන්ගේ තාම අවුරුද්දක සැලැස්මක් නැහැ. එතකොට දැන් මම ඇහුවොත් කඩදාසි වලින් කොච්චරක් විකුණන්න බලාපොරොත්තු වෙනවද අවුරුද්දක් ඇතුළත? එතකොට මේ ඇනුම් මේ පැකේජින් වලින් කොච්චරක් කරන්න යනවද කියන එකේ මොකද ඒක මත තමයි ඔයාට අවශ්‍ය ඉන්වෙන්ටරි එක ස්ටොක් එක රඳා පවතින්න ඕනේ. මොකද මම දන්න විදිය අනුව ඔයා 100%ම හදපු ප්‍රොඩක්ට් එක විකුණනවා නම් ඔයාට මාස 3ක හරි ඉන්වෙන්ටරි එකක් තියෙන්න ඕනේ ඒක කම්ප්ලීට් කරන්න. එතකොට ඒ කියන්නේ ඔයා මාසයක් ඇතුළත විකුණන ටික ඔක්කොම ප්ලෑන් වෙලා තියෙන්න ඕනේ තව මාස 3කට කලින්. රයිට්? ඉතින් මං හිතන්නේ මට තියෙන පෙහෙලිකාව ඒකයි. කියන්නේ දැන්ට ඒ සැලැස්ම නැතුව අපිට කොච්චරක් ස්ටොක් එකක් ඕන වේද කොච්චරක් ඉන්වෙන්ටරි එකක් ඕන වේද කියන එකේ පොඩි චකිතයක් මගේ හිතේ තියෙනවා. ඒක ගැන පොඩ්ඩක් පැහැදිලි කරන්න පුළුවන්ද?
අපි අර ඇසුරුම් කරන්නේ දැනට ඕඩර්ස් කියන ඒ වගේ එකකට යමුනොත් ඒ කියන්නේ ඉක්මන් මුදල් හම්බවීමක් කියන දැන් අර මම තේ කසල තේ වලින් හදන කඩදාසි වගේ හැදුවොත් දැන් මේ වගේ දේවල් කරොත් මේක gift item නේ. gift item වගේ හදලා ස්ටොක් එකක් හදාගත්තොත් දැන් මේකක් සාමාන්‍යයෙන් අපිට පුරන්නේ රුපියල් 400ක් විතර වගේ වෙනවා. gift item වගේ එනවා. දැන් ෆයිල් කවර වගේ ඒවලත් සංචාරක හෝටල් වල ඕඩර්ස් තියෙනවා.
ඕගලන්ගේ ප්‍රොඩක්ට් එකේ මොකද්ද තියෙන වෙනස? මේ අනිත් ප්‍රොඩක්ට්ස් වලට වඩා
අමුද්‍රව්‍ය වලින් භාවිතා කරන අමුද්‍රව්‍ය වලින් තමයි අපි අලෙවියක් බලාපොරොත්තු වෙන්නේ.
අපි ආයෝජනයක් කරනවා ලියන එක ආයෝජනයක්. මුගේ මේ කඩදාසි නිෂ්පාදන අමුද්‍රව්‍ය නිෂ්පාදනය කිරීමත් ඒ ක්‍රියාවලියට සම්බන්ධ වීමටත් ඒ අපි අතු සියලු දෙනාම එකමුතු වෙලා නමුත් ඒ සඳහා අපිට 130ක ඒ කොටස් අවශ්‍යයි. මොකද ඔබතුමන්ලාගේ ව්‍යාපාරයේ වටිනාකම තක්සේරුවක් ඔබතුමන්ලාට නැහැ. ඔබ කැමති නම් මල්ලන් දෙන්න කියන්න.
අපි කතා වුණේ අපේ ව්‍යාපාරයේ ඉදිරි දැක්ම තමයි මේකට යෑම. ඒ වෙනුවෙන් දැන් අපි ඔබතුමන්ලාගේ යෝජනාවට කැමතියි.
So, what did you see? So, can you just explain? So who are they?
It promotes equity. They are new entrants to the businesses, but they don't have enough capital, or maybe like that gentleman asked, that there's no proper plan or the stock. So they are bringing the business proposal, and then those who are established in the business world, that they will propose like, okay, give us like this much percentage. It's something like Shark Tank program, right? So
Yeah, exactly.
They're
So,
SMEs,
so in
basically.
which category these funds belong?
Equity.
So is it debt, equity, preferred stock, or what?
Equity.
Yeah, it's equity, right? So now you can see the difference, right? So banks don't do that. I mean, banks won't like charge this much of high percentage as well, right? Sometimes, so they have like the maybe 15%, 10% kind of loan. So why they would charge higher percentage? So what's the advantage the entrepreneur has going for equity compared to debt?
There is no sort of compulsory scheduled payment.
Yeah, it's not a scheduled kind of payment, because they want to become like a partners, right? So if you, I mean, they're bearing this risk of like if the business go bad. I mean, so they bear that risk. So that's why they need like the high return. So that's kind of thing. So I just want to mention, like, so that's the difference between equity and debt, right? So that's the main difference that you can see in private sector financing. So whether to go for like the equity or debt. Equity, you can have like a partner, but you might have to like give like high percentage in return, because they hold a high risk. But debt, you might settle up with like low percentage, but you have very strict repayment schedule. And you don't have any other commitments, right? So you can just have, yeah.
Excuse me, sir. So just to clarify, equity means ownership, හිමිකාරිත්වය.
Yeah, it's ownership.
Okay.
It's ownership. So that's one of the main differences, right? So if you become an equity holder, so you become an owner of the business, right? So you have
capital.
say in.
Excuse me.
Yeah.
Capital also belongs to equity, no?
So capital comes in any form. So it can come in like the equity or debt. So capital is a kind of general word you use, and so the specific terms you would think of whether is it equity or debt. Capital is the common word you use. It's a general word. Yeah. So it's one of the main advantages you have is that, so say for an example, you see, I mean, some guy who's in your like the village who's having a nice business model, but he doesn't have like the funds to expand or something, and you say that I will give you this much of money, and I want to become a partner, and you have to give me a share of your like the profit. So that's kind of like the partnership that you are discussing in equity. So that means, so you bear the risk of losing your money. But if the business go well, so you have, I mean, this is a good investment for you, because yeah, that's why, I mean, people invest in like good businesses, so they see good potential. Because when the business go well, so you can earn a lot compared to like the just depositing in banks and places like that. So yeah, so that's the difference between the debt and equity. And yeah, so if you go back to the public sector, the public sector doesn't have kind of equity debt structure, but they have implicit structure, right? Usually they run with debt, so that's why they give main priority. Right? You see the treasury bills, treasury bonds, and all debt, right? All debt, right? That means just because you bought a treasury bill or bond, so you cannot become partner of government operations and things like that. So they pay you the interest and that's it, right? So you act as a like the debt holder in this case. So they don't have like the equity kind of things, except sometimes they go for public-private partnership. So in that case, if you are a private sector firm and you invest some money in like the government project, so you can become a partner of their like the projects. So in that case, it's kind of raising money through equity, similar to like the private sector, right? So there are a lot of places that you can see, especially SOEs. Sometimes you can see the listed SOEs. Sometimes they list SOEs in the like the stock exchange, and the government keep 51%, the majority, and rest they allow the other people to invest, right? So that kind of thing is a good model because that brings the like the investors, the private investors into like these firms, and they also have some say in the decision making, and so that helps, I think, probably make the government SOEs efficient, right? So these are the like the government SOE debt equivalent, the equity equivalent. And also there's some theoretical frameworks, and you need to do the calculations, right? For example, how to see the weighted average cost of capital. For that, you have to see that what's the cost of your equity, what's the cost of your debt, and you have to track suggest that. I think we discussed that during the classes. And you have to see the weighted average cost of capital. For example, just think about that guy you have seen in that the program. So in that program, right? So say that those people, they said that they will offer them like the equity offer at 30%, and that's 30% is like the one cost that they have. And the other thing is that, so this guy goes to bank and borrow other half at maybe 15%. So now you can see the two percentages, right, to raise funds, right? So you have to average them up. So the weighted average cost of capital is how you average them up, right? Yeah, so that's how you can average them up, and that's what you call weighted average cost of capital. And you can see that how much you raise out of the equity, how much you raise out of debt, and you have to proportionate that, and you have to get a average figure, right? So that's the thing. It's just like averaging, right? For example, if you have like the loan at like the 10% at one bank and 15% of another bank, if the amounts are same, you can just divide by 2. If the amounts are different, you have to proportionate them, right? So that's kind of thing that you do here. Okay. Then social opportunity cost, we briefly discussed. It's like the discount rate that you use uh, in the social ones. I would suggest, you don't have to pay too much attention to that. The social discount rate. Um, uh, but back calculation you have to master, right? So back calculation you have to master, but social opportunity cost you can leave out. So back you have to master. Yeah, how to do this calculation and get the final back is a must. Okay. And we also discussed some of the other examples, such as like the international corporate finance, and also global financial markets, stock markets, why they exist, and what are their importance. In brief, you don't have to go into detail, right? And also exchange rate and things like that. FDIs, so what are they? And so what's the difference between FDIs and portfolio investments? So can anybody say what's the difference between FDIs and portfolio investments? In short, can anyone say? So what are FDIs and what are portfolio investments? give an example. If you think about port city or maybe some of the harbor projects, so are they portfolio investments or FDIs? What do you say? FDIs are basically like long-term focus investment that you draw out of the international. For example, say that port city and like there are a lot of other projects that you can see, right? So they bring capital to the country and they invest and they hire people and they operate within the country. It's a very long-term process that they go through. And portfolio investments are like you just an investor, you buying stocks of that particular country as a stock exchange, and if you want, I can sell those stocks and go back. So it's kind of very temporary thing you think of, and from the country's perspective, you should always think of attracting more foreign direct investments. So that's how you can see you should progress sustainably. Yeah, so this is pretty much it. I think we covered. I think some of the sections I skipped, but I want you to go through once again, right? And go in detail. I especially want you to go through the applications and examples and things like that. Also, differences in the concept that we discussed. For example, performance-driven, like the forecasting. So how we can apply to like the particular situation. And for example, right? And also SOEs. So what differences you can see in SOEs compared to like the private sector firms, and what things that you can make SOEs efficient. So SO is important for the economy or not. So are they just kind of a burden? Should government privatize them or not? So these things, I mean, you have to analyze in detail, right? So I mean, anybody can analyze just on surface, but thing is that I need you to like the analyze them critical. I think you already have good experience with the assignment, and I mean, a lot of them did a like, good job. So in going through in detail and analyzing once. Next, what we can do is that so we'll go to the assignment and we'll go through some questions followed by. So I will invite the group to present. So if I go through roughly on the assignment, so in the assignment, what I ask is that so I wanted you to go through the financials of the government, and I wanted you to come up with some recommendations of current issues in the budget, and if you see some solutions for the government's uh, debt overhang, or maybe some imbalances in their government financial statements. So what measures you can think of, or are there any places that you can cut expenses and you can improve your revenue? So these are like solutions that you have to come through, right? So I will ask the group who did well in the I mean, there are some other good projects as well, but this project has some merits. uh, so that's why I selected that. So I invite this that group to like the conduct the presentation. So followed by, I mean, there's a we can have like a quick Q&A session. So you have 15 minutes. Uh, you can finish this within like the 10 to 15 minutes. Yeah, so we can just go through.
Shall we start, sir? Hello.
Yeah, you can start.
Okay, now we have analyzed the statement given by you. The topic was given, the specific topic was given to executive briefing on Sri Lankan fiscal health and strategic policy recommendations 2025 to 27. I'm little difficult to talk because I'm the dengue positive antigen. I'm in hospital right now. Sorry for that. Okay, now I writing
And
anything.
then, yeah, I'm sorry to hear about that. So then you can hand over to one of your members. I mean, if you're not well, you can hand it over to some other member.
Tushara, can you take it?
Yes, sure. I hope everyone can hear me.
Yeah, sure, we can.
Yes. So we are going to talk about fiscal deficit overview, government revenue versus expenditure, debt service burden, and what are the fiscal reforms that we will need. So you can see over here in 2025, we have listed what the revenue was and then the expenditure and what is the fiscal deficit. That means if the expenditure, the difference between the revenue and expenditure. So you can see that in 2025, debt servicing alone has consumed over 90% of total government revenue. So it has left a minimum fiscal space for development. So we have observed that it highlights a structural imbalance that can impact negatively on long-term sustainability of the fiscal health. So next, we are going to do the revenue analysis. So over here, the revenue sources, amounts, and the percentage of totals are listed. So the main revenue sources are tax, non-tax revenue, and then domestic goods and services tax, income and profit tax. So these are the ways that the government is earning money. And this pie chart shows the it's just a visual illustration of how the revenue of 2025 has been composed. So next is the revenue growth trajectory. So the total revenue is projected to grow around 5,012 billions in 2025 and approximately 5,929 in 2027. So the annual growth rate is 8%, which is a positive number. But then again, it is not sufficient to close the fiscal deficit. The reason being expenditures are increasing and then the debit servicing costs are increasing. The key issue that we have observed is that revenue growth is incremental while fiscal pressures are large and high. If Sri Lanka is going to rely only on natural revenue growth, it will not solve fiscal imbalances. So this is the expenditure. The total expenditure was 6,670 billions, and a large portion has been allocated to interest payments, and then we have personal cost such as salaries, pensions, and then 17.4% of capital development. So this personal cost reflects that it actually representing the size of the public sector and the long-term obligations that the government has. If we look at the ministry allocations, the highest portion is given to Ministry of Finance, Planning and Economic Development, followed by Health, Public Administration, Transport, and Education. So these are reflecting the national priorities such as debt management, healthcare delivery, and then administration, governance, and infrastructure development. So the challenge here is that ensuring the value for money. Just because the money is allocated, it doesn't guarantee an efficient outcome. The impact of public spending is actually challenged by inefficiencies in procurement procedures, project delays, and then monitoring is also not strong. So performance-based budgeting and accountability mechanisms are critical and required if we are to maximize the outcomes of what we are allocating to spend. I'll hand over to my colleague, Idunil.
Yes, Tushara, thank you. I'm starting with slide 12. This slide highlights how large the debt repayment burden compared to government revenue. In 2025, interest payments alone consume about 59% of the total government revenue. This means that more than half of the government earns goes to paying interest, not even to the main loan amount. Debt servicing is also expected to rise by nearly 8% in coming 3 years. This reduces the money available for development projects and public services. Moving to slide 13. Here explains the financial gap. Even after funding the essential services, infrastructure and salaries, government's revenues, it is still not enough to cover total expenses. In 2025, there is still remaining gap about 0.38 billion rupees. This gap exists mainly because debt service costs are so high while revenue growth is limited. And the slide number 14, you can see the borrowing breakdown. This shows how the government plans to finance the borrowing needs. And about 96% of the borrowings comes from domestic services and only 4% comes from foreign sources. Here we can say that relying more on domestic borrowing reduce foreign currency risk and exchange rate exposure, but it can also put a pressure on local banks and financial markets. And this slide here we give the answer for is borrowing actually necessary when we adopt essential services, infrastructure needs and government salary obligations. The total committed spending comes about nearly 2 billion rupees. After accounting for available revenue, there is still remaining gap about 382 million rupees. This confirms that borrowing is not optional. It's required to meet the current fiscal commitments. Since borrowing is necessary, the next question is how to improve the revenue collection. Here we introduce the 3 major strategic recommendations to improve fiscal health. First is improving the income tax efficiency. Secondly, creating a new taxation avenues. Third is optimizing VAT collection. Here the goal is not just to raise taxes, but to collect tax more efficiently and broaden the tax base. Moving to slide 17. Let's look at first improving income tax efficiency. Income tax currently contributes less compared to consumption taxes like VAT. One major issue is tax evasion and underreporting. The recommendation here is to strengthen audit and enforcement capacity within the Inland Revenue Department. And with this, I hand over to Tushara to continue.
Yes, and we can explore new taxation avenues like imposing digital economy taxation. For example, there are like Kills Online, the supermarket, supermarket platforms, and then carbon-related taxes or green levies on polluting industries, and we can increase the taxes on harmful products like tobacco, alcohol, and asset based on asset value, progressive taxes can be imposed on properties. VAT optimization is also a critical area because we can actually increase the VAT base, expand the VAT base, and then there are a lot of exemptions given currently. So we can look at more sectors and reduce the exemptions. And then again, we can look at introducing e-voicing and real-time reporting systems because digital invoicing can actually significantly boost revenue increasing rates. So this is the expenditure optimization. So the key is actually to optimize rather than reducing. Over here, we can see that improving the procurement strategies and then enhancing the workforce, the necessary developments have done in workforce productivity, and then there are things like digitizing public services. So through those things, waste can be reduced, and then service delivery can be improved. So that's how the expenditure optimization can be achieved. If we look at the debt management strategy in 2025, it is strengthening domestic debt market and then managing foreign debt exposure, improving the monitoring mechanism, and ensuring fiscal discipline. So the main strategy is borrowing should be directed towards growth enhancing investments rather than recurrent spending. So it's more like ensuring that debt is contributing to future economic capacity. Let's look at fiscal consolidations versus economic growth in Sri Lanka. So fiscal consolidation means that actually it's the process which government reduces budget deficits and stabilizing public debt through either combining revenues or lowering spending. So fiscal consolidation must be balanced with economic growth. If we are to go towards an aggressive consolidation, it will definitely slow down economic activities, and then unemployment can be increased, and even public services can be weakened because we can do things like salary fees freezes and then cost cutting, but those will produce only short-term reliefs, but there are risks such as long-term human capital loss, things like that. And if we are going to raise taxes, it needs to be done with the careful design, because if not, what will happen is living cost will go higher. It will have a bad impact on low-income household. Overall, consumptions will be reduced, and then the businesses will be discouraged to expand, or the reason being when the tax hikes are there, that it will affect them, and the operational costs also will be higher. So the investments will be discouraged. So what we are suggesting is actually taking an optimal path, a gradual consolidation. How it can be done is through public sector reforms, strong governance, by establishing a strong governance, and then there should be transparency in debt management, and growth investments should be targeted in infrastructure, education, and healthcare. For example, for infrastructure, we can invest in renewable energy, or maybe digital governance platforms, invest in digital platforms for government sectors, maybe to support remote services. And we can look at market-aligned labor demands. What are the skills in demand, and then expand those skills. So to do that, we need to invest in vocational education, and hospital infrastructure can be developed, and the healthcare workforce can be developed. So those are the targeted growth investments that we can do. So if we are trying to achieve a sustainable economy, then we have to align the fiscal policies with those recommendations. Thank you.
Yeah, thank you so much. I think that brought I think good insights. So what I like most is that so their organization and their prioritization of the needs that the government have on top of their priorities. So they have analyzed whether the current revenue is enough and or not. And in addition to that, and they also did good research. I think they have gone in detail to analyze like what are the issues and are there any spaces to optimize. Yeah, so I would like to open the floor to questions. So if you have questions out of their presentations, you can ask. So are there any questions? Rest of the class, do you have any questions out of their presentation? I mean, they're mostly linked to what we discussed. I mean, if you go through, so what sources that government use to finance, and also you have seen where their expenditure are directed. So all of these, I think, they have demonstrated in their presentation. So are there any questions? Anyone? No questions?
No, sir, but that was a very good presentation and very, very, very
yeah, exactly.
fine.
Yeah, that is a good organized presentation. Yeah. Yeah, so that brings to the end of the lecture. That means the review session. So I just wanted to highlight the key areas that I wanted to bring your attention prior to the exam. So, I mean, those are the already covered areas, and so perhaps I haven't had time to go in detail. But I wanted to read through the notes as well as like the revise the materials that we covered in those weeks and get familiar with the concepts as well as familiar with the applications, especially the assignments, things that I ask, because I can ask things that related to your assignment and like I can combine that with the theory and see if all the members contributed and things like that, so I can test. So if you worked hard on the assignment and if you go through in detail, you can easily understand like the applications and I mean how to apply these theories into practice. So like you have seen in the presentation that one of the group have done. So there were some other good presentations as well, but since the time limitation that we had, so we had to stick into like one presentation. So likewise, so be sure that you're familiar with the concepts as well as the examples, right? For example, just make sure you know how to do the calculations, like calculations, based on like the numbers given and comparisons. So what are the main differences and also weaknesses in some of the approaches. and policy issues that the government will be facing going forward. So what are the risks that the government would be facing? So make sure you are thorough with the current developments as well as like the theoretical aspect that we covered. So there are areas that you don't have to pay much attention that I think I mentioned during the review session. So there are areas you have to prioritize. So if you remember the areas I stressed, so make sure you are good at good with them. That means just not just going through the like slides, but you should be able to apply them and should be able to like the have like the meaningful analysis when it comes to like the questions. That's pretty much it. I think so we can wind up the review session. So do you have any questions? Any questions? Anyone? Okay. If you don't have questions, so we can wind up the review session. And I wish you all the best with your exams. And probably I think we will meet if there's I think last time we had like the gathering, I think after the exams and all. So if you come to those, I mean, probably if I find myself there, so we might be able to meet. And if not, I mean, so wish you all the best with your exams and everything. And yeah, right. Okay.
Thank you very much for your contribution.
Thank you, sir.
Thank you, sir.
Thank you.
Thank
Good
you.
night.
Thank you very much.
Right.
Yeah, good night. All right. Thank you.